I kind of went to Ed and he'd been talking about the committees, and then Barbara announced them at the meeting, and I essentially said, well, here's the stuff I need to bring to the board. Let's just put that on the finance meeting. And again, if we go back to 2014 and 13 with everything that was happening with the committees at that time, I wanted to add this one, mainly for Jeff and Barbara, your thing too. As your finance director, I really want to kind of satisfy what you would like out of this and what you view the purpose of this finance committee meeting to be.
Okay. Go ahead, Barbara.
Yeah, I appreciate that, Steve. And, we haven't had the committees in about 5 or 6 years at least. And for me, it's just to provide ratepayer oversight, we're the eyes and ears for the community, and to be able to represent the ratepayer. And then also, and this is, of course, retaining to district business, the finance business. Some stuff may come up in a couple of committees. We get more sets of eyes on it. And then I think we're a little more prepared, a little more familiar as we go into the board meeting. And so hopefully this will kind of shake out the first level of questions.
Good.
Yeah, and thank you for preparing it and taking your time.
Yep.
So along those lines, I guess a secondary question, and again, we'll work through it. This is our first one, but some of the items I feel are like purely consent, or more of a housekeeping type thing. And I know you're always open to discussing them at committees, but I kind of question whether your desire is that everything go to committee first, or if we feel it's a consent item or something that we want all 5 board members' input, is it okay to go directly to the board meeting, especially if it's time sensitive or something like that? Because I don't think we've still shook out whether this is a standing committee every month on the second Tuesday of every month, or what it's going to end up being. But specifically, any feelings about consent type items?
I like those questions, because it can be a standing committee, and if there's no items, then let's say we don't meet. It doesn't have to meet just to meet. Nobody needs an extra committee. But regarding consent items, if you feel that, for an example, I noticed I've been looking at other water districts committee meetings, and they cover an awful lot of information, like in a half an hour. And they have these meetings like between 11:30 and 12. And now that's a fully functioning, well-oiled board that's been used to working together for a long time. And so they blow through stuff pretty quickly. And so I don't know how to answer that. If it's just seems like a courtesy, it wouldn't take a committee anytime at all to just say, yeah, let's put that on the consent calendar for the regular board meeting. Just as a pass through.
Sure.
I would agree with that. I think what I'd like to see is just what I think you've already got here, Steve, on item number 3. I just want to see what our position is compared to our budget and where we stand. And I mean, that's what I do here with my own business, and just see just a snapshot view of where we're at. So.
Yeah. Well, I appreciate your input, Barbara. You know what I do and how I do it for many, many years now. Jeff, you've seen, I think you got me figured out as well. So, I want to make the committees as useful for all of us, as well as ratepayers, as possible. Again, there's certain items that I think have to be done, and we will start with the committee, but then on the same token, anything you two would specifically like to address or whatever, we can add that as an agenda item for next time. So, hopefully I could prepare or give you what you're looking for. But for today, obviously these are the 4 items we came up with, but I'm open to talking about whatever today.
Okay.
Like, here's a suggestion. Like, let's say for the Sonora Regional Wastewater Treatment Facility, I think this committee would be a really good place to just really look at those costs and how we, that's that $15 million loan, right? Plus the 4.7 million grant, plus our own ratepayer money that we're kicking in. And then look at our customers. I mean, we really need to look at those, kind of spend time. Are we going to do an assessment district? Are we going to, we need to really look at how we're going to make this thing pay for itself. And who are the beneficiaries? And I would like to have at least that kind of discussion in at least a first cut of that discussion. Because these meetings, even the JPA, like Jeff was saying, the budget review, but I found that the JPA was really fascinating. I mean, I really read that thing and edits. I love that stuff. And I don't want to take up board time with it though,
What JPA?
Yeah, I'm sorry, the
TPPA.
TPPA, the Joint Powers Agreement.
Oh, okay.
Yeah, okay.
Yeah, I think that's a healthy discussion. I guess I always think as a general manager, I'm always looking at the big picture and trying to bring our experts together into a cohesive, unified approach to management. Because I really, at the end of the day, I'm more of a policy wonk, an organizational efficiency, organizational culture, the kind of student of life. I mean, that's kind of my character, I think, is always finding better ways to do things and continual learning. And having been through grad school and all these different theories about how to produce a better product. I mean, all the way from total quality management in the 80s and 90s to new technologies today. They share a lot of kernels, but there's some good in all of it. And I try to bring that here to TUD and bring our management team together, and they manage their independent departments well as additionally. But it's all about trying to bring it together for the board so you have an excellent organization to oversee on behalf of the ratepayers. So when I think about this and this open-ended question, what's the purpose of the finance committee? And Barbara, recognizes that, provide ratepayer oversight. That's really at the heart and soul of any organization is, the financial resources. There's many others, but we're focused on finance here today. And I know that Steve has done a great job. There's a lot of checks and balances. There's a lot of reporting. And there's a lot of data throughout the year that goes out to the board and to the community to show how TUD's exercising the ratepayer resources that it's provided to, return and provide a quality product per the mission statement. So what I'm interested in hearing from the committee members today is, given all the types of reporting that's done now that, as I've mentioned, is very transparent, what more would this committee like to see, if any, with regard to how we go about the monthly claim summaries, going through the strategic plan, the CIP, and that builds the budget, and then the quarterly financial reports, and then the mid-year budget report. Is there something more that this committee would like to see added to how we report finances that would be good for the board and the community?
Well, this isn't on the agenda. Maybe
it's the purpose
under the purpose.
Yeah, I'm talking about purpose. So if we're the finance committee,
okay,
and we're looking at how we manage finances, and I'm looking at it from a global point of view, how do we manage finances better? Is there another way of looking at it, or something we'd like to do differently to improve how we do this?
I was struck by something that one of our new board members, Lisa Murphy, had said. It was alphabetical for her, the claim summary, and there was no criticism. But she had said it was difficult for her to categorize everything typically, there's management, there's job codes. I don't know what we call them exactly, Steve. And then the expenditures are under that. And I think you do a really good job. This is just claim summary. Okay. I'm not talking about what we're going to talk about today, but I think it would be good to consider a different way, perhaps, of arranging the claim summary. I'm used to alphabet because I'm familiar with it, and I can read it, and it's alphabetical, and I can go to the things pace, and horizon, or just things like that. But is there also another way that wouldn't be too much work? See, I just want to kind of not just blow off a board member's askance, and maybe if she asks again and says, look, I'm really having a hard time tracking things by project. Staff will say, well, it's in the budget. I don't even know what I'm saying. Well, I'm saying this, the claim summary. Would it be too much work to organize it by job?
Well, Barbara, I thought I addressed it appropriately to Lisa, and I haven't heard anything come back of this. But,
Okay.
Every report we prepare and we provide is what is the purpose, what is the objective, and who are the stakeholders that get it. A claim summary, almost every governmental agency prepares what they typically call a warrant register. And the claim summary is meant to satisfy that. And a warrant register is literally just a checkbook. And so it shows the payee. It's not alphabetic or anything else. It's here's the payee, here's what was paid. Now ours goes over and above what you typically see at a school or county or city, because it shows every single payment, every single description, the whole thing in there. What I heard Lisa asking was like you're saying, well, I'd like, I can't tell what account this is. Is this supplies? Is this that? Yes, we have 550 some odd accounts in our statement, but that's really what the quarterly financial reports are meant to show.
Okay.
And we've had a board member before who demanded to know every single payment, where it went and the whole bit. And again, it was hundreds and hundreds of pages. We can easily generate that, but I would hate to do that and then not have the other purpose. So now do we add a second report? And again, I think this is something, maybe the next one we can come back and talk about reports. Let's agendize it. I think we need some feedback from the other three members. We really don't, as a special district, have a prescribed government regulation that says what the claim summary looks like a school does, for instance. But again, we can provide whatever's there. I just hate to provide a report that isn't useful or nobody looks at.
Right.
And so I got the impression that Lisa is so brand new, let her see what we do and how we do it. And then we're happy to accommodate. I apologize if you think I blew her off, because I certainly don't think I did that. And I don't want to ever do that. So.
No, you didn't. This is just a discussion. And when I was a school trustee, we called it bills and warrants. That's what we called it, bills and warrants. And it was a register. That was it. That was its purpose. And we just made sure we were looking at it. And, when it says gloves, and, I looked up those gloves. I actually look at what our expenditures on there. And I think that should be incumbent on each board director. So I'm like really listening to you. You did explain it well. And I'm hearing you. And for this purpose, this is the way we're doing it. So how about, let's say myself or Lisa, would you feel okay? I know you've always had an open door policy, but I just want to ask you again, would you be okay? Like if somebody like Lisa or any of us board members made an appointment with you on a particular item to see a little more level of detail, perhaps?
Yeah, I always welcome the opportunity to educate the board, and especially when you have two new board members. I'm comfortable. Again, the way the policy's set up, everything goes through Ed. So as long as we coordinate it, whatever we want to do. But again, I think, to me, I almost attribute that to orientation. But you all know, if you send me an email, I'm going to reply to it. If you call me, I'm going to call you back. you know, it's kind of, I don't know Lisa well enough as far as what she wants to know or doesn't want to know or where we're at. So I think let's just work through it as we go forward. And, you know, I'm happy to accommodate.
Okay. Yeah. Yeah. So I'm aware of our policy, says go through you, Ed. So I'm aware of that.
Well, and I think we've talked about it. There's flexibility there where if it's just an easy, quick question, it's fine if a director just contacts one of the managers directly for quick Q&A. But I also think it's helpful because I think Barbara and I have had this discussion. If a board member has a question, usually one or more has the same question. It's helpful if we could get that out to the full board. It doesn't always have to be that way, but I do find that usually when one board member has a question, the other board members are thinking similarly. They're just not asking. So it helps to consider putting it out as an email that this has been asked, and that way the whole board gets edification from that the response.
I don't like that at all. I'm sorry. I mean,
Well,
I don't like that approach at all.
okay.
Yeah, for me,
Yeah.
you know, we've talked about this before.
And I suspended that practice, but I do believe that if one board member is asking, because I found this, I've been doing this a long time. When one board member is asking, usually other board members are thinking similarly, and they benefit from that the information being shared. But I guess my main point was, since we're thinking about the purpose of the finance committee, I was trying to keep it real high level. Is there something that we could do better to provide financial oversight and reporting to the board and the community? I didn't mean to drill down into quite a bit of detail, but I think that's one of the purposes we have here, is to make sure we're doing a good job reporting our finances.
Well, yeah, and making sure the money's going where it's supposed to go. And, you know, the claim summary, for what it's worth, I like the claim summary the way you have it now, Steve. I mean, it doesn't mean that it couldn't be better. I don't know. But, you know, I mean, certainly Director Ringen, he asked a lot of questions on it. I mean, there's no doubt about that. And they're good questions. And you or staff members are able to answer those questions and tell them everyone exactly where that money's going and what it's for. So I certainly wouldn't want to get a 400-page report and try to reconcile that before each board meeting. So I kind of like it the way it is.
And, you know, my approach has always been progress. There's no such thing as perfection. We have new personalities, new interest. We're dealing with new events every day. So I welcome the input, and I look forward to providing the best possible information. We got a lot to cover today, guys. I kind of apologize. I wanted to apologize up front. Some of it, hopefully we can go straight forward, but just as this item might trigger additional discussion, which I think is great. So.
Well, on that note, if we don't have any more comments or questions about committee purpose, can we move on to the TPPA?
Is there any committee recommendation for this item, or are we just having it as a review item only?
I didn't hear any rock solid recommendations.
Okay, I'll just leave it at that it was a review item.
Okay.
Okay, thank you.
All right, so that brings us to the Tuolumne Public Power Agency Joint Powers Agreement amendments. So Ed, is this you or is this Steve?
Yeah, I'll go ahead and take
Go ahead.
all these, Ed, unless you want
Look back at it
to.
carefully, but Steve wrote the staff report, so go ahead, Steve.
Okay.
Yeah. So along that same lines, you'll notice we're calling them items, item 1, 2, 3, and 4. The format's kind of what I think we used to do. I think Melissa revived one of the templates. Barbara, obviously you've seen it before. We took your recommendation for some other districts and what they do. So again, I welcome your feedback. I wrote each of these 3, tried to put in a context that I thought was appropriate for the committee and for our discussion. So item number 2 deals with the Tuolumne Utilities District is a member of the Tuolumne Public Power Agency Joint Power Agreement, or Joint Powers Authority is what I refer to it. And this TPPA was formed to purchase and provide electrical service for members' own use at reduced rates. TUD is the second highest power user behind Tuolumne County, though Columbia College surprisingly is very close to us. But the county obviously is quite a bit higher in their usage. Member agencies entered into the original JPA on May 19th, 1982, and it was last amended, the agreement, on January 1st, 2013. And I found it curious, it's not in your copy, but President Balin at the time signed the last one in 2013 for TUD. The amendments proposed by the TPPA Board of Directors are to redefine the tiers along with some other updates. This amended agreement has been reviewed and approved as presented by TUD's legal counsel. So what I've attached for you is, first and foremost, the amended and restated joint powers agreement, and second of all, the one with track changes. This originates with the county and the JPA's Board of Directors. They went through, made these changes, send it out. There's approximately 36 member agencies, and requested our feedback, I believe, by March 1st or March sometime. So there is a time element here, but obviously we have enough time to bring it to the finance committee and then bring it to the board. As I mentioned before, I looked it over. We really feel it's mainly to bring in some additional agencies. Both the tribes are new to it. And we also asked Jesse to review it, and he was fine with it as well. There's no real substantive changes. It doesn't affect our standing in the tier. It doesn't affect our rates and what we qualify for. So I really view this one as kind of a housekeeping item, if you will. But again, they drafted it. It's an update from 2013, which has been a while, but it functions very straightforward. And with that said, I'd be happy to answer any questions, Jeff or Barbara, you may have.
Yeah, I had a couple of questions, and I think you just answered them. And that was, does it affect our tier? Does it affect us? Does it affect our rate? And also, do we lose any status? But it doesn't sound like none of that is pertinent.
And that's
the TPPA doesn't come near the full utilization of its available power.
Okay.
Yeah, and that was our first concern as well, Jeff. And again, Jesse confirmed it as well. And we reached out to the Liz Peterson's the one who's in charge of the TPPA down there at the county. And we confirmed that, first and foremost, if we were to get into an outage or something like that, we still have our standing, which we do. Does it affect our rates? No, it doesn't affect that. Again, we don't see any problem with approving this as it's written, but so I think you hit the key points, Jeff. And Barbara, obviously you've seen it before, so you're aware of it.
Yeah. Barbara, you got any comments on it?
I do. First of all, Steve, I really appreciate the way you brought this forward. I need to look at the redacted language, that's what's being changed. And so thank you for, the strike through language in here is that gives me a sense of where we were and where we're going, what the amendments are. So I really appreciate that. I can't function if I'm just getting the clean copy and that's it. And then I have to go back to my files and find an old copy and try to marry them up. So I appreciate the way you this came to us so we can see the difference right away. And to me, I looked at it and it was just really kind of cleaned up the tier 1, tier 2 language a little better, made it a little cleaner, really. And like you say, it's not affecting us. And the other thing that I didn't really realize that it was crafted in 82. Mm-hmm. And that's astonishing to me because this is a definition of leadership. I mean, people are thinking about the first, power buy or Groupon or whatever, term we call it, that there's enormous savings when we collectively look at this in a sustainable way. And I would love to actually see more of this kind of thinking countywide. And I was very pleased to see, of course, that we added, formalized the Chicken Ranch Rancheria Band of Miwok Indians and the Tuolumne Band of Miwok were added to this too as federal agencies. So, and that there is a clause for anything that has a profit attached to it, you know, in addition to government entities. So I have no further comments on it. So I just want to say I appreciate the way you brought it forth here.
Yeah, thank you, Barbara. And you reminded me of something. You know, I always try and provide the redacted, but sometimes when you rewrite the whole thing, it's almost worse trying to see what's changed in here. But this was relatively straightforward. And I should have said at the start of this, part of the agreement says that each governmental entity's board has to approve this via resolution. So, you know, this isn't something Ed or I could just sign off. There's a formal resolution, you see in that. So, you know, basically we're recommending that the Finance Committee consider recommending to the board to approve the Joint Powers Agreement. And it would basically be presented just as I have to you, to the full board at the next meeting, if that's acceptable for you two.
Okay. Ed, you got any more comments?
Well, I just want to point out that there's history here that I just want to make sure the board's aware of. And the reason there is a JPA, it's an outgrowth of the United States Bureau of Reclamation, New Maloney's. And it was one of the conditions by both Calaveras and Tuolumne when they were, you know, protesting the construction of New Maloney's in their counties was, you know, first right to hydropower. And that's why we have the JPA. That's the history there. I don't, you know, I just want everyone to understand that there's a reason why we have the JPA, and it was to be able to exercise the value of this tier 1 hydro generation provided by USBR. There are rate increases periodically. I think the last rate increase was July 1st, 2020. I think Liz Peterson sent an email out. It's about 8 cents per kilowatt hour, which if you're tracking with PG&E, that's a great deal. It does save the public agencies quite a bit of money throughout Tuolumne County to be a part of this JPA. And the tribes were already in the JPA. But they were part of the tier 2. What this does, if you go through the track changes, make them part of the tier 1. So it's a definitional change. And I think it also addresses some of the tariff issues that PG&E has on transmission and distribution. So you know, there's no impact to TUD here on this. And I believe the TPPA board is already, while they haven't approved it, they're the ones that created these revisions to be decided on by each body. But in essence, they're looking for each agency to approve it. And then it goes back to the TPPA board for formal adoption. But it's a great value to TUD. And it's good to see that it's continuing.
Ed, was this created due to sort of mitigation because this is part of the county of origin that the hydro is coming out of?
Yeah, well, I think it's all part of the original water rights protest disputes. And
okay,
so that's a number of, I suppose I could say, good outcomes, although in terms of water rights, I'm not as happy as I'd be if I think we should have got more out of the Bureau in terms of water than our opportunity. But what we did get was codified into federal legislation that TUD is an area of origin, in-basin user with regard to CVP water. But that's good, and we'll talk more about that Thursday the 18th. And as we pursue the CVP water supply contract, my frustration there is I don't necessarily want to be a CVP water user. I think we should have been getting some kind of recognition for our 27 area of origin water rights and senior to any of the CVP users. So we're kind of lumped in with Westlands Water District and all those downstream agencies that are CVP users. But a little frustrated on the water rights side, but at least we got something. You know, we're eligible to be a CBP water user. And then on the power side, we get this preferential power that's generated at New Maloney's. And that's why, and the benefit of the area of origin counties like Calaveras and Tuolumne getting this tier 1 hydropower. It's not as cheap as WAPA, the Western Area Power Authority, which is Western wide, but it's still half or less than half the rate of PG&E retail if we were not included in this New Maloney's tier 1 preferential power. So it is an outcome of protesting the feds coming in and building a dam in Tuolumne and Calaveras counties.
Steve, you had something to say?
Yeah, last comment I'll make on that. I'm glad Ed brought up the value here because it's come up before, both in the public and at the board level. But essentially, you'll see in the claim summary, there's payments to TPPA and there's payments to PG&E. Part of this agreement is it's at the meter level, whether you qualify or not. So if we have these meters that use a very small amount of power, we're required to stick with PG&E. Once they reach a certain level, they can become part of TPPA. And my staff watches this very closely. Every month they track the usage, the meter readings. We attend all the meetings with Liz Peterson and TPPA. She reaches out directly to us. She provides us information. So that relationship's already there. And they did have a meeting, I believe the middle of January, where they approved this as it went out to everybody. But like Ed said, I mean, PG&E's rates are kind of hard to follow, but it is right now 8 cents per kilowatt for TPPA, and PG&E can range anywhere from 23 to 32 cents. So you're looking at 3 to 4 times the rate on that. And the number of meters we have is almost identical. I think it's about 70 on each of them on there, but we track it and we are able, if the usage goes up, to move those over to TPPA. So I just want you guys to have that as part of your back knowledge.
Okay.
And I don't have our annual electricity cost in my mind right now, but it's a big number.
Yeah, it's top 5 for sure.
It is. It's in the top 5. It's a big number. So think about if you were paying PG&E retail, it would be
3-4 times that.
3-4 times more. So it's a great value to our residents and ratepayers.
Takes a lot of kilowatts to move water. Believe me, I know.
Yeah.
Utilities are always some of the highest power users anywhere.
Yeah.
So again, just to recap, we're asking that the committee recommend to the board to approve this and for us to add it to the next agenda.
Okay. Barbara, you had a comment?
Well, 2 comments. First one, yes, I definitely recommend this to the board. And 2, for the city, the LA area, 1/3 of every water dollar is power. 33 cents to every dollar is for pumping it over the Tehachapi's. That's incredible. Yeah, but yes, I recommend this to the board at large.
Okay, so what do we need? Do we need a vote, or what? Or just the 2 of us are agreeing that it's a recommendation?
That's correct. I just need the committee's recommendation to move forward.
Okay, well, I certainly agree as well. So we'll go ahead and recommend that to the board that we approve the changes to the TPPA as published. That good enough there, Melissa?
Perfect. Thank you.
Okay, right on. Okay, let's move on to item number 3, the fiscal year 2021 mid-year budget review. Mr. Steve.
So I'm going to attempt to share my screen. Bear with me. I'm still learning with this Zoom. So ideally, you can now see the PowerPoint slide.
Mm-hmm. Yep.
Okay. And on mine, there's, your pictures are now on the side there. I guess you can minimize those. You can move them. You can do whatever. I'm still learning. I'm sure you guys are better than me. I have a very short PowerPoint presentation. It's really just a couple slides, but I think it kind of sets it up for the discussion. So ideally, what I'd like to do is let me talk at you for a couple minutes here, go through a couple slides, and then we can begin the real discussion.
Hey, Steve, before you jump into the slides, can you just review the overarching purpose? Why do we do a mid-year budget review?
Yeah, this is what I was planning on doing next, Ed. Thank you.
Okay.
So again, let me see how I'm. Okay. So pursuant to board adopted budgeting policy at mid-year, there will be a comprehensive review of the operations to date in comparison to the existing budget. Projections of revenues and expenditures through the end of the fiscal year will be prepared and reviewed by management staff with a report to the board of directors by February of the operating fiscal year. The current fiscal year budget, fiscal year 2021, was approved by the board on June 9th, 2020. On October 13th, the board was presented with the completed financial audit for fiscal year 2020. At the October 27th board meeting, staff presented the budget report and balance sheet for the quarter ending September 30th, 2020. The mid-year review is an analysis of the financial status of the district's funds for the first half of the current fiscal year, covering the 6-month period of July 2020 through December 2020. This review compares actual revenues and expenses to the fiscal year 21 adopted budget and provides year-end projections. The adopted budget approved expenditures in the amount of $19 million and $8 million, and revenues in the amount of $17 million and $7 million for the water and sewer funds, respectively. Approved expenditures include CIP in the amount of $5 million and $3 million for the water and sewer funds, respectively. The attachments include revised revenue and expenditure projections through June 30th, 2021. There are 2 attachments in there, but I'm going to go ahead and just point out a couple observations that we have so far related to that before we look at the attachments. The revenue forecasts are based on actual receipts year to date and projected increases based on the new rates. The last time that we had new rates was January 1st, 2020, and anticipated consumption by district water customers for the period January through June. Other operating revenues included in the utility billing category include hydrant meters, penalties, septage, and septic fees, which were also included in the above projected revenue as calculated on receipts year to date and a forecast of the remaining months of the fiscal year. So after we went through and did our projections and analyzed consumption, look at historical usage factors, the projection for the rest of the year is that the water will come in essentially $988,000 over budget, which is about 6% for a variety of reasons. Sewer at this point would be $230,000 below budget through the end of the projected fiscal year. And the total utility revenue projection would be 3% over budget. Other revenue changes to note, and again, we'll get to the attachments, is probably the single biggest one, not part of that utility billing, was investment income. And we all know what's been happening over the first 6 months, over the past year, as far as that. And we're working with our new financial management team and actually starting that process. Now, the one other item to note is capital grants. Normally, capital grants are not included as they are reimbursements for CIP. However, in this case, this increase of $579,000 is related to funds already received for the Cuesta Heights Tank CDBG project. The expenses related to these projects were incurred in this fiscal year, thus the reason for including this in the projection. As far as the expense accounts, we're going to talk about, or I'm going to point out some observations. Most of these are, I'm calling reductions. And really, it just means through the end of the year, we anticipate coming under budget by the categories presented. First and foremost is personnel. We're projecting it to be under budget by about $475,000, which is mainly due to position changes, such as retirement, backfill, recruitment timing, and some unfilled positions. There were also benefit changes associated with this, such as health insurance, workers' comp, PERS, and MOU modifications. Chemical and supplies are projected to be under budget by $158,000. One of the main reasons for that was the fuel cost, and there's also some reclassification changes between supplies and repairs in comparison to prior years. Services is projected to be under budget by $62,000, principally due to the timing of consultants. Utilities is projected to be under budget by $63,000 due to electricity, as we just talked about in there, compared to what was originally budgeted. General and administration is projected to be under budget by $165,000 due to a variety of account classifications, including general insurance, fees and permits, bank charges, and then travel and meetings, among others. The one line item that we did project an increase for is repairs in the amount of $93,000 due to changes in the capitalization policy and actual repairs to date, including equipment rental. Total expense, all combined, projected a decrease of approximately $830,000 or 4%. Now, the next two slides, I'm looking at my Surface Pro, and they're really, really small. I don't know for Jeff and Barbara if they're the same. I can try. What I was going to say is I have this. Wanted to see if this is any better. I get over to here.
Steve, I also am looking at it on a second screen. I don't know, Jeff, if you were looking on it as
Yeah.
a second screen.
Yeah, I am too. I don't have, I've got it blown up nice and big here, so not a
Okay.
problem there.
So
Yeah.
for Ed, does it look better if I do it through the PDF? Like I just switched my screen from the
Yeah.
PowerPoint?
What you're doing right now is clear. I can see
Okay.
it well.
All right, so before we start the discussion, I just wanted to kind of go over these two slides, if you will, or the attachments. The first one is the combined budget report for December 31st, 2020. And this is comparable to what you see on the quarterly basis. So what you're looking at, this is everything combined, water, service, and administration. We have 4 columns, the first column being the current total budget. The next column, fiscal activity, that's for the 6 months ended December 31st. Then a variance between those two, and then a percent remaining. So if we had an item that was literally exactly the same throughout the year, month to month, and everything else, you would expect that percent remaining to be about 50%.
Mhm.
So typically what I do here is I kind of look at everything between, say, 45 and 60%, and they should be, pretty much that's in the ballpark unless there's any explanation to it. I did hit on a lot of these items when I, in my narrative there. But if you'd go ahead and go to the next attachment, like I said before we start talking, this is really kind of the heart of it, if you will. It's a mid-year projection, and there's 3 columns on here for this year. Again, it's combined water and sewer and admin all together. And these are the categories. And the first column was the adopted budget as the board adopted it. The shaded column projected in the middle is, what we did. Now, to get that projected, I talked about revenue, how we did that. As far as expenses, we have about 550 different individual accounts that fit into these half a dozen categories. My accountants and myself go through every single line item, looking at historical over the past 10 years, historical actual detail over the past 6 months. We met with the department heads. Don Perkins provided a lot of information here. We met with the engineers, and we really took it on a case-by-case basis. What do we know? What have we seen before? To really come up with our best projection, our best estimate of how we're going to end And then that results in the variances that we just talked about. Now, in addition to that, I added a few line items down at the bottom, because you might say if you just stopped after the net before CIP, you'd say, oh, well, we have $5.5 million. We're in great shape. Everything's fine. Well, if you remember, when we adopted the budget, yes, we had $5.5 million net before CIP, but we adopted a budget of $7.5 million for CIP. We have debt service principal that's not in those numbers. And we also had some reserves that we're either going to be pulling out or putting in. So when the board adopted the budget, we basically adopted a deficit of approximately $2 million. And the thinking is, with CIP and some of these other ones, there's going to be delays. There's going to be grant opportunities. There's going to be some other ones. So that is what was adopted. Now, if you compare that to what the projection is so far, you can see, we're basically coming up with this additional $2 million variance between that and that. And so what we did is I got together with Eric Johnson and Don Perkins and all of the superintendents and really went through the CIP kind of line by line. Now, that's not really the purpose of today. I think, that would be a good separate thing to get a CIP update. And I know they do it on a regular basis, but we kind of looked at it and we said, okay, which of these projects have been delayed? Which of these projects there's something that wasn't started or is not as much money as we thought or whatever. And I just asked them to project through the end of the year. And we came up with this $7 million, if you will. So there's, we're projecting about a $500,000 difference between the original total CIP versus that. Principal wouldn't change. And then reserves, it's kind of like whatever we have left is going to go into these reserves. You can't really put into reserves negative money unless you go borrow money or whatever. But if you remember, the original budget had us going out and getting financing for $2 million. So I'm pleased that my projection here will say we've gotten through 6 months without additional financing. I think we can complete this as a reasonable, practical, and achievable result that we can get through the last 6 months without any additional financing. And so that gets us to this idea of a balanced budget. So all said and done, collapse it down. In the item description, I said that, this review projects the district having sufficient revenues to meet required operating expenses. No budget revisions are recommended at this time. So, really the purpose of this today is to project out and say, where are we at? Where are we going to end up? It's not necessarily to go through each line item and say, change this budget here, change that budget there. I like the idea of we know where our budget started, and then we can explain where we are now versus just changing it. I know, Barbara, your experience with schools or some federal governments, every meeting they'd change the budget to equal actual. And then you kind of lose the whole concept of what did we plan on and what did reality hit. We all know there's been huge changes due to COVID, due to PSPS, due to PG&E, due to all these other things. So, really my preference, my professional recommendation is that this report's good. Everybody should get this and receive this and have this discussion. But I'm not a fan of going through each of the 500 accounts and just adjusting it to actual, because we don't know what tomorrow's going to bring. We don't know. We have another month under our belt and we're closer to that. But I feel a lot better that we weren't having to go out and get the financing. And on that, Barbara, you made a comment before about the regional treatment plant. And again, I just want to assure you, we've been working on that for many, many years. And over this past year, the USDA process, it was really the first time for me and Eric. Ed's done it before at other places, but the USDA makes you prove that you can afford this and you can fund this. And it's not going to go on the ratepayers, and it's not going to require an assessment district, and it's not going to require this, this, and this. So all of this lead up, all of this for us to get that financing, we had to prove to them, and you all, saw the application, you saw the letter of conditions. All of that is dependent upon that fact. So, again, to me, it's kind of like here, if I had to go get $2 million financing, you know, of course, we can do that, but at what cost and who's going to suffer for that? So we're not to that point. So I know I ran through a lot. You probably have a lot of questions, but that's where we are right here. I'm open to any questions, any discussion, comments.
Barbara, you got some questions or anything, comments?
No, this was a real learning experience. I really appreciate you unpacking it, Steve. And it was interesting looking at the reductions at the beginning.
Mhm.
I think
Do you
that's
want to
what,
go back to that, or should I close my screen?
that's okay. But so just to make sure I understand, that means we budgeted a certain amount and we are below that certain amount. Am I reading that correctly?
Yes.
Okay, that's what I thought. Okay. But that when we look at this last slide, we actually have a deficit of 2 million.
That was the budgeted, right, Steve?
When you look at the last slide, the first column was the adopted budget.
Mhm.
So the one I have on the screen right now, the bottom down here, I don't know, do you guys see my pointer?
Yep,
Yeah.
sure do.
Okay, so down here, this $2 million, that is what the adopted budget, it adopted a deficit. You can remember me, Nervous Nelly, saying, oh, we're doing a deficit budget. No, stop. But, you know, I mean, obviously here, you know, we're coming out, the projection is that we're not going to have it. We're not going to deficit spend this year. And we're coming out. But that first column is the adopted budget. The middle column's the projection. So we're saying after we analyze all the revenues, all the expenses, we see us having a balanced budget.
Mhm.
Great.
Good job, Steve. I think the numbers, they speak for themselves. So I really have no comments other than good job, especially on your projections. I mean, you're hitting those pretty good. So.
Well, we watch everything really, really closely. And again, this is, to me, since I've been here, the thing about TUD is it's such teamwork. You know, this isn't me. This is all the departments, Ed's involved, HR's involved, you know, my staff, I couldn't do it without them. But, you know, I take very seriously my fiduciary responsibility to the ratepayers and to everybody else. And, you know, when we're looking at all the things we have on our plate, I mean, this is kind of the critical stuff we have to do day to day so we can get to the big stuff. And all the staff is really impressive in how they do things and what they do.
Yeah, well, and I agree with you. I was nervous about that too when we did adopt that budget. I didn't like that $2 million deficit. And in fact, on my monthly calls with General Manager Pattison, we discussed that several times. And so I'm happy to see that the forecasts are coming true.
Yeah, you know,
Steve and I think very similarly, having done this so long, that we plan for the worst and hope for the best. And that usually lands us in a very good place. I mean, it's a very conservative approach toward budgeting and management. But I think as a public agency that's a nonprofit that, you know, represents ratepayers and taxpayers, it is, I think, incumbent upon us to be conservative, which is why we do what we do, and why we, you know, we recognize here at TUD and Tuolumne County in general that our deferred capital improvements are enormous.
Mm-hmm.
And we also recognize, and it was for the most part inherited, and that's the story of TUD. And little by little, we've been chipping away at those deferred capital improvements. And I think over the last couple of years, what we've seen is a significant increase in how we go about chipping away at those deferred capital improvements. In fact, one of the requirements in the GM's Exhibit A performance metrics was to implement more a kind of a parallel construction process of contracting out on-call versus TUD crews. And that's been one of the reasons we picked up the pace in terms of being able to chip away more quickly at the deferred capital improvements. I think one of the other financial vehicles that's helped with the pace and speed was the GM authority to authorize some of the on-call construction projects up to $150,000. And, you know, while we have such an enormous deferred CIP, when we go through each year and update the CIP that ultimately builds the budget, we also recognize that we are strivers. We strive to do as much CIP as possible. We also recognize that due to some of the reasons Steve just mentioned, there's unexpected delays that come up. And we don't always complete that CIP. So when we went into that plan financing, we recognized that with our conservative approach to budgeting, an aggressive CIP, that there's a strong likelihood that we end up in a balanced budget position, which is what we did in the previous fiscal year, and that's what this is projecting to be at the end of this fiscal year. So I think we felt pretty safe recommending the budget that we did when your board considered it for adoption in 2020. And I appreciate Steve too, bringing up USDA. Having been through that a number of times, I know it's an enormous amount of work, and Steve and Eric Johnson really put a yeoman's effort in. I will tell you that USDA is worse and more rigorous and more difficult than doing private financing or going to your traditional bank. I mean, it's a large federal bureaucracy. They have a team of financial wizards and experts that turn over every stone and require ad nauseum information to get through their process. So when they provide a financial package to TUD to consider for adoption and to accept to be able to use for a project, it's because they have gone through everything associated with TUD's finances and agree that TUD has what we call the TMF, the technical, managerial, and financial capacity to proceed, and that it is in the best interest of the ratepayers. Otherwise, USDA would not provide a financial proposal like they did. So I appreciate Steve bringing that up. Our job is to really be accountable and to make your board feel comfortable. And I know we do this day in, day out. We talk quickly sometimes, and it may get lost between the lines, but I appreciate Steve bringing that up. So hopefully, at least for Barbara and Jeff, and I see Ron on here too, that you guys understand that there was a lot of work that went into that. And we're happy to talk more about the finances of the Sonora Regional Wastewater Treatment Plant, but there was a lot of work that went into it, and we know we can afford it, but we can parse it out in more detail in future discussions.
Steve.
So just a couple comments that Ed reminded me of. You know, when we look at that budget to actual, that's not going to include the grant funded projects. So, you know, while we said $7.5 million was our CIP, we also have $4 million into Phoenix Lake. And, you know, that's all going to be, you know, getting the money from them is kind of a different story. I mean, the cash flow's been a little tough on that, but you know, we got $4 million that benefits this community, this district, everything else that isn't reflected in our out-of-pocket budget. Yeah, we front in the cash a little bit, but we'll see how that works out. But, you know, anytime we get an opportunity to achieve our strategic plan or some of this infrastructure and not have our ratepayers pay for it, you know, there was just a lot in that. I mean, that's a huge project. $4 million is amazing. So to summarize, the recommendation is for this finance committee to consider and recommend to the board to receive and file this report. There is no action. I'm not proposing revising the budget. Again, it would be presented as it was to you, an open discussion. And I really appreciate your patience and your I really feel I have your support and understanding, and that's important to what I do.
Yeah, I agree with that recommendation. Barbara?
I agree with that recommendation. And I think I will do some follow-up, Steve, with you to help me understand a few things. And, I'm a gardener, but I really appreciate your counsel, and I really trust the way you see stuff. So if that's okay with you, I'll keep some of those questions focused. Of course, I'll run them by you too, Ed. Okay. Yes, I recommend. Please thank staff, Eric and your team for all the hard work they do.
Thank you. Will do.
Steve, you brought up the the state grant for Phoenix. How much is out? So for the board's edification, I think I know, but what's our outstanding float to the state for the grant reimbursement?
I think last week we hit $4 million.
So I just want you guys to be aware that that is an enormous amount for TUD to be floating. And having worked with the state feds on grant reimbursements, typically most programs, it's a very rigorous paperwork process and an audit trail, as I think you would expect, which is good because it holds everyone accountable. But the guidelines are that those reimbursements should be made within 90 to 120 days. And that is not the case here with the state on this Phoenix project. And we and Steve's staff, as well as engineering, has been doing an enormous amount of work attempting to prime the pump, educate the state through our Tuolumne Stanislaus IRWM staff person, as well as at DWR, to let them know that this is coming, heads up, and then it's here, and also providing all the technical information and financial information required to get the reimbursements. And despite all the advanced planning, communication, and work, I'll just say this, we're extremely frustrated. And I'm almost at the point whereby we might start talking to our legislative representatives about this, because right now the state's broken when it comes to this topic. TUD ratepayers should not be waiting 6 months to a year to 2 years for these reimbursements. And there's something fundamentally wrong with the state's grant system if they cannot turn around these grant reimbursements within 60 to 120 days. Maybe that's something we agendize to talk about. I can just tell you staff is extremely frustrated on this one topic, and we are working on it, but we're almost at the point where we've done everything we can, literally administratively everything we can, which is why I'm starting to think that I need to call the higher ups at DWR and or our legislators and let them know the system's broken and it needs to be corrected.
Thank you.
But I don't want to create a problem but one exists. We're trying to find the best solution to move forward, because the ratepayers should not be waiting as long as they are. So thanks for letting me vent a little bit on that one particular item, because it is a lot of money outstanding.
All right. Okay, Melissa, you've got your recommendation then?
I do, thank you.
All right, you bet. Okay, moving on to our final item on the agenda, the water leak adjustment policy amendments.
So this is the last item I agendized. I'm happy to discuss anything after this, but this is also the item that's more, I don't know, do I call it philosophical? It's an issue that's been around. We debate frequently here with our customer service. Originally, I believe it was 2008, the district adopted, I believe, the first leak policy. Prior to that, you'd have, John Smith says, hey, I had this big leak. He'd come to the board would talk about it, and they'd come up with something. Well, then, leaks are a problem. We get calls on a daily basis about them, any system. I know, Jeff, you know the background of that. Barbara, you've heard the stories at the board level and everything else. So, you know, in 2008, we tried to make a policy that we could stand behind and show and was fair to the most people. You know, you can't make everybody happy. You can't do everything. You try and be fair. You try and be reasonable. You know, the state, it's illegal to misuse water. And so, you know, you have some people who's, well, your water's so cheap, it's better just not to fix it, you know, and just let it run. And then other people, you know, can't find it. So you have all these things. So in 2008, this policy came out. We amended it in 2015. I think Director Ringen was the president at that time. But since that time, you know, principally Emily Long, our customer service supervisor, you know, she really oversees everything in that department. And our approach is always to say, you know, we have to stick by our policy and we can't make exceptions, everything. There's always an exception. There's always something, but, you know, we need a policy for something like this. Otherwise, it just gets completely unwieldy and hard to deal with. So, you know, we've been dealing with the policy from 2015. And one of the things, you know, we had a drought, okay, 2015. So we changed the policy. And since that time, you know, we have instances come up all the time. And, you know, what Emily and the customer service representatives run across is that our current policy, we have forms, you fill out an application, you have to do this. And it's really hard to understand. It's complicated in the calculation. The vast majority of people don't qualify. And so you have customer ratepayer dissatisfaction. You have a policy that's hard to enforce and implement. And so Emily and I have been working on this for probably a year. COVID hits and we're kind of the same thing. And so what we came up with is staff is proposing the changes to the existing policy to reduce the complexity and increase ratepayer eligibility. We did a thorough survey of numerous other water agencies' leak adjustment policies and above stated objectives, and the suggested revisions we came up with are as follows. 1, we removed the $50 processing fee. 2, clarification of the eligibility requirements. 3, removal of the $200 deductible. And then 4, the adjustment allowed every 3 years rather than 2. Now, obviously, there's a financial effect to this. And that's why, you know, originally I kind of said, well, this is a water issue. And Emily's like, no, it's not. It's a financial issue. You know, it deals with the billing. It deals with the rates. You need to take it to the finance committee. So here I am with it. You know, Ed kind of asked too, well, why are you doing this? Why are you doing that? Well, again, you know, we looked at a lot of other agencies and they're all over the board. Some don't do any leak adjustments. Some do leak adjustments all the time. Some do it once in a lifetime. Some do it half of it. Some do it a certain dollar amount. So it's kind of all over the board. So we tried to apply what we've seen and what we've experienced and to find a happy medium. I mean, obviously, all ratepayers need to contribute to the operation of the system, but we don't want to incentivize not fixing a leak, nor do we want to punish somebody who may not know they had a leak. And sometimes it can be really big dollars. We've had some of these leaks be $5,000, $6,000, $7,000. And you know, again, where does the responsibility lie in maintaining our pipes or maintaining pipes inside their house? And everything in between. So, you know, I don't mean to minimize the importance of this policy, but I don't think it's in anybody's best interest to have the board to have to see every single application because we get all the time. And some of them, you know, they just shouldn't qualify in any context. You know, we have to take into account the state of California's directives with water, take into account. So I kind of think, you know, this was mostly on Emily's recommendations and how she wrote it up, but we ended up with this one-page policy. You can see, I also included the track changes, kind of see where we go with that. And if I take the, you know, kind of what we've seen over the past 12 months and the past fiscal year, I'm estimating that the fees and deductibility amounts would be in the neighborhood of $8,000. It could be higher than that, depending on that. But like I said, it always kind of comes down to judgment and what they provide and how they do that. Now, if we were back in a drought, there were different rules that applied then during a drought. But like I said, this isn't black and white. This is what we feel. You know, Emily's been with us 8 going on 9 years. She's exceptional at what she does. Her and her staff deal with the customers every day, but you know, we have to say, here's our policy and here's how we apply it. And if we see something that's wrong, and this one isn't so much that it's wrong or it doesn't work, it's just hard to understand. And a lot of people don't qualify. And we feel it'd be better to have more people qualify, even though it will take some staff time and it will take some money out of that. But this way, I think, you know, more people are eligible during the COVID crisis. You know, we're seeing people that aren't able to pay their bills and some of that's going on. So I think it's kind of a win-win or a good thing for all these purposes. Yes, we changed it from 3 to 2. That's kind of just a personal experience. Like I said, most of the districts do it 5 years and some of the other ones.
Steve,
Huh?
you said 3 to 2, you meant 2 to 3.
Yeah, right. Thank you on that. And like I said, I have surveys from other districts. I didn't want to have to provide that to you, but anyway, that's my kind of long-winded, you know, introduction to the topic. I welcome your observations or input here. This is what we came up with for your consideration.
Yeah, Steve, this is a touchy subject. I know my little water company, we're constantly fighting with, especially just like perfect examples this last storm. You know, we had several cabins freeze up and then it warms up a little bit. Next thing you know, you're using a lot more water than you should be. And that's the problem. I mean, every drop that gets leaked like that customers ask for a reduction on, that water had to be pumped. It had to have chemicals added to it. It had to be run through the filter. It doesn't change your expenses at all. It's expensive water. You had to pay somebody to go out there and turn it off and dig it out of the snow and everything else. And it's expensive to deal with. Not only is it expensive to lose that water, it's expensive to deal with. So it is. I applaud you for coming up with a pretty detailed plan here, and I agree with you. I mean, there's sometimes when it's warranted, we need to bend a little bit, but it's a fine line, and you spelled it out perfectly. I mean, you can get bit by it too if you get too generous with it, and the next thing you know, it's too easy. So I'm all ears on this. Barbara, you got any comments you want to throw in here?
Sure. Again, I really appreciate what you're changing. I have a question on number 1. That's the leak adjustment requests. The last sentence says no leak adjustments will be granted during the district declared drought status. So let's say somebody's got a leak. They read this and they go, okay, we're in a drought. I'm going to wait till, you know, the emergency is lifted. And then can they come forward with the leak adjustment once the declaration's been lifted?
No, how we've interpreted that during the past drought was really when the leak occurred. You know, we've had people do just that and argue with it. And, you know, Emily's really good about dotting I's and dotting the T's and being fair to people. And again, you know, when we were in that emergency phase 2 or 3 or whatever it was in there, it's very clear in our water rules that you don't qualify. And so it's really when the leak occurred. And there's also a thing where you can't go from period to period to period. You kind of have to pick a period to do that. And Jeff reminded me too, just to put some context in this, in the last 12 months, we granted 31 leak adjustments. And that's out of 14, almost 15,000 customers. I guarantee you, we had hundreds of applications and requests in there. But yeah, good point, Barbara. And also, I thought you were going to go there where it says district declared drought status. We did have Jesse look this over as well. He kind of got back to us too late to provide you that, but he had questioned, whether we need to tie that into the water rules, or we say the state mandated one or whatever. So, I think it's okay the way it is. But yeah, to answer your question directly, it's all when the leak occurred.
Okay.
And I think also, Barbara, too, if I could jump in, on a situation like this, most of these leaks that Steve's talking about in this leak adjustment policy is when the leak is on the customer side of the meter. So when they find out they have a leak, it's usually when they get that first bill and it's way out of whack to what they're used to paying, and they want that water turned off now. So for them to allow it to go, 6 months to when the drought goes away, that kind of thing, I would be very surprised to see somebody want to do that and pay that extra consumption charge to get through, just so they don't have to, might make them a little more in a favorable position to get the leak adjustment. So I don't know. Do you agree with that, Steve?
Jeff, it's always a struggle. We have error checking procedures. Our meter readers, they're cognizant of this. If they see water, they're going to bring it up. And when they read the meter, it'll give them an exception report that it's, way off track compared to the last month. Our main billing clerk, she runs these error checking reports before she does the bill. A lot of times customers say, well, why didn't you catch it and stuff? Well, we catch a lot of them, and we do. And during the drought, we're going to turn somebody off. But, we have such a variety of use. It could be, that irrigation meter that runs 800 feet to the top of the hill and over Dale and all that sort of stuff to, inside the home, or especially these vacation homes. During the last snowstorm, you all saw we had a hydrant get clipped off. And sometimes we have meter readers out there going house to house trying to figure out where the leak is or how it does that. So it's a wide variety, and you just can't fit all situations. Like you said, you got to try the best you do, which I think our staff does a really good job working with our customers and trying to catch everybody we can. Unfortunately, we just can't have 100% automated meters yet. It's just going to
be. In some of the cities I manage, that's where a lot of cities are going, is migrating to these automated reads and software whereby customers are able to read their usage within 15 minutes. And when they see this new software availability, they're seeing leaks like they've never seen them before, like toilet leak, and it's down to that type of resolution. And it is really tightening up the system. And there's a little money up front for that, but I think it's generating revenue for the cities. The problem here in the country where there's topographic relief is that the cost of upgrading to that kind of technology is enormous because it's all line of sight. Mm-hmm. And so cities like in the valley, it's much easier for them. I don't know if we'll ever get there. Maybe we will someday, depending on state regulations. But certainly with the new state regulations on just auditing our systems under this new SB 555 and the others that are still emerging, there's a lot of required accounting here. And I think this is going to help us. But remember, we're on bi-monthly systems. So when people get they're about 3 months behind the leak, it's tough to know until it's too late. And I think this helps. I think Steve and his staff did a good job trying to make a tough subject at least user-friendly and fair and reasonable. And I think that's the balance point we're all looking for.
Yeah. Steve, just a ballpark percentage figure, how many, where are we at as far as the automated meters compared to the manual reads?
We're up to about 65%.
We're getting
so we're continuing to do it. There's just certain areas where you can't. I mean, Matt Nolte and the distribution crew, they have a very optimistic plan to go do it, but everything gets affected, weather and the whole bit. But, they catch an awful lot with this. And like Ed said, if I had to paraphrase this, our existing, these changes, I think will benefit some more customers, and they'll also benefit staff. There'll be more work for the staff, but like right now, it's challenging a lot of times for Emily to explain the calculation, or why is there this $50 processing fee or something like that. So I kind of think this is a compromise to improve for both of them. And again, 30 people qualifying for leaks, we almost shouldn't have any. I mean, Nevada Irrigation District doesn't grant anybody, no matter what the reason. And I'd hate us to get to that one. We have a relationship with our community, with our customers. And so, we're basically asking the committee to consider and recommend to the board to approve amending this leak adjustment policy. And if you're comfortable with it, I'd like to include it in the next agenda.
One other, just a little more information for Jeff. The meters that Steve's talked about, the automated, are drive-by meters. And that does help. And we really do focus that in the higher elevations so that during the winter, we have that data. Otherwise, in the past, frequently in the old days, you just wouldn't do any meter reading until spring. And then we would use historic water use patterns. This way we are getting real data, but drive-by. Whereas in the valley, it's fixed base radio signals every 15 minutes, updating the online cloud database, which is pretty amazing technology. We're not there, but we are using the drive-by. And I think what they're doing, we're mandated by the state to replace a certain number of meters every year. So any new meter going in, it's a drive-by.
Yeah, that's. I'm familiar with those. We made the commitment 10 years ago or so, and we finally got all of our customers up at Cold Springs on the drive-bys, and it makes a big difference. I don't have to tell you guys that. We don't have 14,000 customers like TUD does, though, so it was a little smaller bite that we had to deal with. But yeah, the technology is there, and it's amazing, like Ed said, and we'll get there one of these days. We'll get there.
And, right now we have 59 routes, 2 meter readers. It takes them almost 2 months to get everybody read. But some of these routes where they've been able to convert them, they're able to read it in an afternoon. It used to take them 3 or 4 days. So there's benefits for sure. And these guys are able to do other things. They're not just meter readers. They do other stuff all the time, replacing meters, chasing down service orders, looking for leaks. I mean, so, every meter we can automate benefits us. Sorry, Barbara.
You good with that recommendation, Barbara?
Yeah, and yes, I recommend, but I also wanted to go back to what you guys were saying about that leak up there where I guess a snowplow hit in Cedar Ridge, that hydrant. And it really got me thinking about how expensive treated water, like you said, Jeff, it's already been treated, it's already been, processed, and that just, boom, bled out right there. And I think it would be kind of crazy to here we can't recover that water anywhere. So in other words, I really agree to make this policy really humane, because if you are a ratepayer, you can go, well, wait a minute, you're asking me to pay this $50 finance fee or processing fee or whatever it is, and here a county snowplow can just, and you're out that water. And so I like the simplicity of this. I like the fairness of it. I like the humanity of it, especially now when a lot of people are on hard times. It's not going to break our piggy bank. And so I'm totally in favor of this.
All right.
Thank you.
Well, there you go, Melissa. You got your recommendation. And I think we're done.
So the only other question I would have, I don't know if we just do as needed, or is it appropriate to come up with a meeting for next month? Or any agenda items, or do we just play it like we did this one?
I like the idea of having just a standing agenda item at the end, just, anticipated future agenda items. That way it's formally identified. And then if the committee members have something in mind, or even staff, that's where we make note and pencil it in. And then the committee chair can consider including that for the next month.
I like the idea of that as well.
I actually would like to learn more about the finances of the Sonora wastewater treatment plant, not about the guarantee that we can pay this back and the extensive vetting that US BOR did for us, or USDA. I'm not, I understand that part, but what I want to learn about is we're taking on, we, meaning the TUD ratepayers, all of us, are taking on $15 million loan. And I just want to know how we're going to be, how do I track that through the budget? I just want to understand it more. That's all. I'm not saying we can't pay it back. That's not even my issue. It's, we got 15 million loan. How does that track through your stuff, Steve? That's
Accountability.
So just a quick response. We can agendize it for next time, but part of that is like any other debt service. So we only have one loan outstanding on the sewer plant. Once we take this 15 million and we complete construction, then we go into the USDA. It's a 40-year repayment at 1.125, Ed?
Correct.
1.125%, which equals out to, I want to say 450,000 a year, or 480.
Yeah, it's two payments, one about December, the other, it's almost like taxes, around December, and the other in the spring. Half of that, approximately 450, which when we did the analysis, we made sure the budget could afford it. So yeah, it's about 450,000 for 40 years.
So directly to respond to you, Barbara, and again, we can go into the details later, but a big overview is, if we were doing the budget right now, down at the bottom where I said principal paid, there'd be principal and interest on this of 450,000 compared to what we have right now. Now, Eric Johnson and Don Perkins and the sewer crew, they're working on the projected operating cost once the plant's built. And we can compare that to what the operating costs are now. But as far as just the 15 million, we need 450,000 a year to cover the interest and principal for the next 40 years.
See, that stuff is invaluable for me to understand what some of the genesis, let's say for a sewer customer rate increase, the basis for that. So that's why it's a real learning curve for me to really understand from the beginning, because I'm taking it that this is going to be coming out of the sewer fund, the repayment of the loan, right?
Right.
Yeah. So just stuff like that is it may just be, an everyday thing to you, but it really helps me. We got water, we got sewer, and so then I can understand. I just understand where the ratepayer sits with the debt service. Okay.
I laugh because, when you say everyday thing, a $25 million project's not every day for TUD or me. I think, if you take regional, Sierra Pines, and PG&E, those three things are the biggest priority, the biggest thing ever to happen to this community for generations to come. And I think about every day. So I think about every day, it's not an everyday occurrence. This 450 was part of the USDA application. So you would have seen it there, but you probably just didn't know where to look. And as far as rates, we're constantly looking at that. Sewer rates are low compared to our neighbors, but our neighbors have different situations. It's also, our rates are dependent upon what percentage of the minimum household income we need to do to qualify for grants. So a lot goes into it. And I agree with you. We need to continue the discussion so that the board is aware of it and educated. But it's a moving target. And, I take it really seriously when we're looking at going into this kind of debt. But not many people have the opportunity to get $15 million for 1.125% over 40 years from USDA. So,
As well as the $4.3 million grant.
yeah. And so that was an opportunity that we were successful in doing. And clearly, hopefully you all understand that, building this plant, I'm not a technical expert, but to me, it's needs to be done. It's one of the most important things facing the district. And for us to be able to do it and look at completing it in the next 2 to 3 years is fantastic. And it'll take us for decades and decades to come.
Real briefly, and I'll address this to Steve. What some things is important to me for you to know is that when, for an example, Ed and I were talking about this, and he mentioned the loan. Okay, then he mentioned what TUD is going to come forth, 4 to 5 million of our own money, plus the same in a grant. And then Ed, you said, yes, in a grant. And then you said, so it behooves us to really make sure that we do this and not skimp on it, because we don't get the grant money until we've exhausted the other columns. Just that was huge to me, to learn that. And Ed, that you just say this offhanded, and that was enormously valuable for me as a board member, just to hear that this grant is what we get left, because then it opens up all that amazing thinking about, well, let's really spend this money as on the best state of the art, most eco-friendly. And we had a great discussion about LED, and that stuff is really helpful to me. And I just want you to know that if I feel like I'm accidentally putting you on the defense, I'm not. I'm just asking for information, and it's not meant to put anybody on the defense. I learn so much when I do ask, and I will sort of shut down if I feel like I'm like putting you on the defense, Steve, or hurting your feelings or something. So I just want I want to reiterate this. I find this fascinating, and I learned something when Ed and I were talking, and I appreciate that that this is not that you work with me on understanding it.
I appreciate that, Barbara, on behalf of Steve and I. We try to be defensive. We try to just be informational. But yeah, we appreciate that statement, because there are some subtleties and nuances that I think Steve and I hope we don't take things for granted, but we do this day in, day out. So sometimes we don't emphasize some of the subtleties and nuances. But I will say, when it comes to this USDA grant loan package, I think even I learned, the USDA is doing these certificates of participation, and we can talk about all of that when we agendize this, but I just wanted to mention USDA is doing it differently than I've done before here, which requires this kind of priority use of funds, being TUD number one. So we have to exhaust that money first. Then we start tapping into the $15 million loan next. And then and only then can we start tapping into that $4.3 million grant. And it doesn't mean that we just want to spend money just to spend money, but
Right.
Talking internally here and strategizing, we definitely, we always want the best of the best for the least cost. That's how we're programmed. We're a nonprofit and we represent our ratepayers, but our technical team, definitely, as we thought about how USDA is funding this particular project, we want to make sure that we're getting the value that's going to be there into the next century, because this is the type of project it is. It's going to be there for another generation or two, well beyond us. And we want to make sure we're forward-looking enough to know that it is built robust, resilient, and has options that if there's funding available, because remember, we're always forward looking on this. It really comes down to the construction contract pricing and any change orders and all the things just like Phoenix Lake. we expected to get more sediment out, but guess what? Some of it just wouldn't dry out and we couldn't get to that, unfortunately. I mean, things like that happen in these big construction projects. So hopefully on the downstream end, when all these numbers start really becoming crystal clear, there's funding available so that we can consider some of these options that could be valuable to the ratepayer community, like solar, maybe. I'm not promising anything, but it's been designed in that if there's available funding, we might be able to do that. But solar is a little difficult when you do a cost benefit ratio, when you have TPPA power at 8 cents, just saying. But anyway, so we are trying to be strategic and forward looking and getting the best value. But we appreciate your statement, Barbara, that you're not coming from a defensive perspective, but just trying to understand the subtleties and nuances. And we can save that for the next finance committee if that's when you want to go over that.
You'd be amazed at how many times I've used those numbers and the order that they have to be spent in the supermarket. You would be amazed because for some reason I understood that and now I can explain that to our constituents out there. So it was very helpful.
All right. Well, I think that's it. Unless somebody else got something they want to bring up here real quick. You need some more comments?
I'll just mention that, as far as other topics or that the committee would like to discuss, if you miss it today, like I always say at the board meetings, we're available by phone and email. You can call Steve or I, or even Melissa, and let us know, what do you want to talk about? And we can discuss that and add that at any time. Our phones and doors are always open.
All right, Steve, you had a comment?
Yeah. I just wanted to say thank you, Jeff and Barbara, for your time and input today. I really appreciate your input. I apologize if I ever come across as defensive or hurt. I think everybody that knows me, I care very much about this place. I care about doing a good job. You can call me a lot of things, but hopefully you never call me inaccurate or I gave you a wrong number. As I get to the end of my career, I'm looking at TUD and what I've been able to do here, and we can't do it without the board. And I continue to want to do a good job. And all you have to do is ask, Barbara. I'm sensitive. I'll confess, and I'll get my feelings hurt. It happens no matter what. But the last comment I wanted to make is I really appreciate Melissa's time and effort. For us here at the office, for her to take on all the committee work, all the board work, all the information stuff, she's really going over and above. I mean, her and I joke, hey, this is just like it was in 2013, but it's the committees have been good so far. I thought today was a good discussion, but please, anything I can provide. But again, shout out to Melissa. She really does a great job for us.
Thank you, Steve. I appreciate that.
That's a good point, because Melissa, you're our gateway. You're for the board. You're our gateway to TUD, and
Thank
keep
you.
us informed, and you're on top of it. And I know I appreciate it.
Thank you.
And no more tape recorder.
No more tapes.
We're YouTubers now.
All right, everybody. Well, thank you very much, and we'll probably see just about everybody that's on this call tomorrow for our meeting.